When it comes to OPEC cuts, you always have to ask two questions. You have to ask the question, what does it do? And what it does is, of course, it removes barrels from the market and makes the market tighter compared to the scenario in which they didn't cut. But you also have to ask what it signals. And what it signals is that there has been an underlying weakening of the market. Supply, demand numbers have been coming in weaker than expected. Inventory builds have been stronger than expected. So in many ways, we would argue that OPEC sort of needs to do this sort of to keep the outlook unchanged. They need to put in place these production cuts to sort of stand still, because frankly, demand has been a little disappointing over the last couple of months, not accelerating as much as we thought. And on the supply side, despite underinvestment, we've seen more of a response than we'd expected a little while ago.
Martin, as we take a look at the price, clearly some fallout domestically, particularly in the United States and even to other economies as well. Some geopolitics here around what this does in terms of supporting the Russians. But in terms of the immediate price action, the biggest swings we've seen in the price of late have been around banking contagion fears. So as we just dig into some of the forecasts now that we could go up to $100 on the price, do you think that's possible? And do you think if we do, we stay there for much in terms of what we've seen versus the trade over the last couple of years?
Yeah, possible is always a tricky word to use in the realm of oil price forecasting, because for short periods of time, almost anything is possible. But I wouldn't say it's likely anymore. Look, oil prices go to these very high levels when demand is surging and supply is struggling. And it's hard to argue that either of these things are the case. Demand isn't as great as it looked to be earlier in the year. At the start of the year, we talked a lot about China reopening. We talked a lot about the growth in jet fuel consumption this year, as aviation has another step up. Those things are actually playing out broadly as expected, but it's in a lot of other places where we weren't really making any heroic assumptions. US demand has been quite disappointing, at least relative to our forecast. European demand has at the margin disappointed. So to offset these things, and also some other elements on the supply side, Russian barrels have largely continued to flow. The non-OPEC response to high prices has been stronger. OPEC can sort of make these cuts to kind of offset these things, but OPEC cuts in and of themselves are not bullish. They are not the type of stuff that gets oil to $100 a barrel. They stop the decline, but $100 just based on oil OPEC cuts, I would find that a stretch.